can you show us how you pulled up the cloud? I forgot what you called it.
Hold on. So I'm just inviting some people. All right, so you said the cloud?
Yes.
All right, so are you saying like how to put it, how to like bring it up, or?
Yeah, how do you bring it up on the chart again?
Oh, so this right here is called indicator. Wait, I always get them mixed up. Oh, this one right here. This one right here. So this little FX button, that's like the indicators and strategies.
Okay.
What you go here is you click on this, then you type in like the name of the indicator that you're looking for. So like let's say moving average, you'll type that in. If you want volume, if you want the MACD, you'll type it. In this case, it'll be Ichimoku. So, and it'll be like, and people will be making their own versions of them too. So you can like check them out. So like typically if you see a popular one, that means it's probably pretty nice to look at. But actually we could, so you just click on it and then you'll see a kind of amount of indicators, but that's just a different one. Sorry, that's not the right one. Hold on. So then you just go here, type it, and then it'll just pop up. And then you could like click on the little gear button right here to change the settings. So like this would be like the amount of the periods of data that you want the input to be. So you could change it to like however whatever you decide to be a better fit for the way you trade. It's kind of like strategies. Like some people like to use a faster one, some people like to use a slower one. So it kind of like depends on you. Displacement as well. Like I believe displacement is, it's been a while since I've used this. Let me see.
I think displacement is how many days.
Okay, that's what I was wondering. The distance between the louds. So you have two lines. You have the Kenjin line. Okay, yep, that's coming back to me. So you got the Kenjin line and the Tenkin line. And when they cross, that's what you want to look for. They call it the K cross. The displacement is the Chico span, which is, okay, so it's like the space between a cloud. Okay, so basically, yeah, displacement is kind of like your how can I put it? Think of it like a margin for error in this sense. So like, and then you just kind of test it out. Like a lot of times you got to back test your indicators to see like how they perform when you use it. And sometimes you'll realize like the default settings don't work that well for you. So I know like, I recall some people would change this to like sometimes a smaller one to make it closer because they realized maybe the displacement, like the cloud being closer, gave them a better price prediction. So it's just something you kind of can play with. But yeah, for anybody that came out, this is just the Ichimoku cloud. I was just kind of showing it, and you kind of look for a symbol cross. When the blue line crosses the red line, that tells you your signal to buy, and when it crosses down, that's your signal to sell. All right, so we'll get on here. So just want to introduce one of my fellow Forex traders, mentee now with the stock options, my boy Nez. He's a really good technical analysis trader. We both use a style of trading called Wyckoff. Wyckoff was this man, one of the top traders, investors back in the late 1800s or 1900s, and him and Dow Jones, the guy from Dow, and the people that's like from other companies, so like Merrill Lynch, I believe, the founder of Merrill Lynch, they are known as like the 5 founders of technical analysis. So Wyckoff is just a theory of you thinking of the composite man, who is basically a manipulator of the market for his bend and will getting price of where he wants it to be. So in this case, Wyckoff is basically looked at in just to kind of put it, you have Wyckoff and Richard Wyckoff. So you have these cycles of the market. You have oversold, then advance up, overbought, markdown. Those are like, you can kind of think of like how price moves. So you have accumulation, which is basically the market, the institution is, or you could think of it this way, smart money is trying to accumulate enough orders to up price. So when you see price consolidating, moving sideways like that, that's basically, you could think of smart money trying to say they want to accumulate enough orders. They want to accumulate enough orders that they have, that they want to get at a great price. And then that's what causes price to kind of advance up until there's an overbought area where people now thinking, okay, I'm going to start taking profit and I kind of want to sell. So now price is going into an area where it's going into an overbought area and getting ready to come down because it's going into a correction, as we know, as how we know it. And then Wyckoff just has a thing about when you could look at it, price and volume. You have supply and demand. When they are in harmony, price moves up, volume, you will see the same result from the volume button. So the volume bar would be as high, should be equivalent to seeing an increase in the price, right? But sometimes you'll see where it doesn't quite act the same. Like you'll see a big volume, but you won't see price move that much. And that's caused the law of cause and effect. And then you have the law of effort versus result. And what that means is that when you have divergence where there's a large volume or maybe a large price increase, but there's not enough volume, or if you have a large volume but no price increase, then there's a divergence, which means that there's been an exhaustion of demand or supply. So when you think of like Wyckoff, think of you're basically getting enough demand that it brings up price until there's an overload of supply. So like now that makes price now sell, because it's basically supply and demand. That's all it really is, right? So the more orders you get for demand, that means price is going to go up because the demand equals price increasing, right? So that's typically how I tend to think about price. And you have these areas where there are buyers that come in that stop price from coming further below. Because if you notice, like price tends to move this way, right? And then you'll sometimes get these areas where price moves up like that. And that's when you could tell like you have smart money coming in to manipulate the market to drive price up. And that's also, as we know, that's like algorithmic trading, high frequency trading, whatever you call it. But that's just basically saying that institution is coming in, stepping in with their massive amounts of orders. Because if you know, like it takes about, could be slightly wrong, but I think it's about 1,000 shares to move price up. So they're coming in with like massive amounts of orders, shares, and that drives price. Actually, I don't want to erase everything. All right, so Nez, you want?
You can hear me, right?
Yeah. I just heard you. All right.
Okay, yeah, because my screen was just going in and out. My bad.
All right. So I just basically before you got on, I kind of told like you was a chart master. My mentee out here flexing with the forex trading, and you've been out here with the technical analysis. So just saying, gonna come in on and just kind of go over because you've been a big study of as far as when it comes to Wyckoff and Smart Money. So a few things that we look at when we're looking at it, like how we started, we look at like accumulation, and we want to see if the price is in accumulation or distribution, or if it's in a markup or markdown. And there's things you look for in market structure that will tell you if that's the case. So in this case, like from just first glance, I can kind of tell you like a way to kind of think about accumulation is think of like price playing around support, accumulating orders, and it kind of goes like in a circle, like a bottom circle. And then if you know, it's like when price sells, it kind of turns like an upside U. So that's how I tend to like think of price the same way like how we see it like this. Of course, it doesn't look that neat. And so that's why you gotta look at like market structure, kind of tell you that. And when I say market structure, I mean you have your support level here and you have your resistance level here, right? And then when you see these breaker structures like in this area, that kind of is an indication that what am I trying to say? Actually, you know what? It'll make more sense if I show you the schematic. So in a schematic, this is just basically like a general
pattern.
You said what?
When you talk about the pattern.
Yeah. But basically, I'm trying to say like when you're looking for a break of structure, it's kind of an indicator that like, shit. I'm just trying to think about how to really put it in words. Breaker structure is kind of like my signal that if there's a breaker structure from here and it comes back here to test the support, I tend to like watch it to see if price is going to come back up. If price doesn't come back up, that's kind of a good indicator that when it comes back down to the support level, and if it doesn't break this area, then price might do something like that instead. So if I was to look at like if I was to let me see.
There was another thing I was going to mention in between that before you already clicked it. But one thing I was going to mention was that so you see that downward trend, that quick downward trend that it had before it rejected off the support again. If you were to go to the lower time frames, you probably would notice another schematic we call reaccumulation, right? So normally they're a little bit harder to find, and usually I suggest, of course, learning the basics before we go into like the more challenging areas of Wyckoff. But from what I'm seeing, this perspective of the daily time frame is that I can already see a form, form, which is why I went back to the.
You kind of, I don't know if it was for me or not, but was you breaking up for anybody else? Was he breaking up for anybody else?
Oh,
Yeah.
Okay.
Yeah, a little bit.
Okay, it's all better right now?
Yeah, it's not better.
Okay, perfect. So where exactly did I start breaking out at, or?
Everything from the beginning.
Okay, let me go back halfway. Okay, so going back halfway, you're speaking about reaccumulation, right? So basically, in order to how do I put it? Okay, how do I put this one?
Yeah, it's hard because it's like, is this something you just look for? And it's just like, so as we have price, and this is how, for me, technically fundamentals help me more, because if I know price is going, if I know that this company is doing well, more than likely it's not gonna drop too far low. Because that means it's then the story becomes different for the company, because now I'm wondering, is the company still a good company at this point when it drops too far low? More than likely it'll be a retracement, but it won't be as much of a retracement at that level. I guess sometimes what you will look at too is like, what I like to add is when I look at the what I'm trying to think of, the Fibonacci.
Hi. How you know it's me?
You look like a Veronica. Look at the way you park right there. That's how a Veronica park.
Okay, I should know this wouldn't be. I'll probably do it from here. So when we have like structure, so what you want to do is like you have a markup, right? So what price does a markup and will come here and come like this. And what you want to look for when you're first looking at a chart, you want to see when it does these markups, you see how like the retracements are very small. That's the indicator that's not a good time to get in off rip. Like when it's marking up like this and price is doing like this, that's not an indicator. What you want to look for is when price does something like this. And what we call that is the change of character. So I'm just gonna start from the beginning for everything. And what that means is that price went up like this and it retraced almost back to the same level. If it wasn't a change of character, then it would have done something like this and then kept on going, right? But since it came here, it came back here, it retraced almost back to like the 90% level of how much the price is. So that's a good indicator, like now price is about to slow down and now we're about to see a possible trading range. And so that what this becomes is, I don't know why this is not working. I'm gonna click this. So this area here, when price got here and it came back here, that's your indicator, that's the change of character. And then this now tells you now that this is the trading range area. So we know now that price will come here and this is support. So you can think of this as now your resistance and this is now your support. And as I said, like this is like now your floor, this is your ceiling. And that's how you think of price. So like price tends to like now wants to play in this range. And this is now you're just basically observing price. Even AMD, technically, if I was to really even look at it, because if I looked at a stock and I was just looking at AMD, this tells me that I still need to watch what AMD does more, honestly. But because we're doing options and I already know I'm just going to be in this long term, it's not going to be that much of a concern. However, right now, where price is currently at, I would say, okay, at this level, price is still trading in the range. I need to watch it a little bit more. So I'll let price play it a little bit more because I'll notice that there was an upthrust here. That's when price breaks the resistance level. So you get this upthrust, which is here. We get another back at the support and another retest. So this would be called like your secondary test. and you're just gonna watch. And so that's why, like for me, I'm patient with a lot of my trades because I'm still waiting for price to do what I needed to do to make me give me the confirmation and the conviction to get into the trade. So for that, yeah.
Oh, no, one thing I noticed today, and following everything that you're saying now, and you're looking at on a 1-day chart, but I found that if you go to, say for 6 months, you could be looking at the just the high. Say for instance, like when I went to bar chart and then I looked at all the price history, I noticed that the range that in which the prices were falling was on the higher end, as opposed to maybe I wanted to go more in the middle of the range. And just by focusing on that window right there, it kind of skewed my train of thought as to whether it was a good price or not. You understand what I'm saying?
Oh, so like, are you talking about what on bar chart when you on the 6 month?
Yes. Well, here I was on 6 months here, but then, and I was like, okay, I can analyze this section right here. But when I spread it out to 6 months, I saw, oh, wait a minute. Okay, wait a minute. Let me go to bar chart and see the price history. And then when I saw the price history, and then I'm going like, oh, I'm at the upper end of the price history. So,
Oh, right, yeah. Because I think this is the high, the absolute high that it's been. Well, right here, well, actually we haven't got up in time yet, but I think this one is either the highest it's been or the previous run up in December. It's one of the two. The highest AMD was at in September was $94.28.
that was just something that caught my attention, that so that I didn't get blindsided, but just focusing on what was going on today. I had to see it in the context of the entire of a larger time frame.
Okay.
Yeah. Okay. That was just my point. Okay.
So yeah. So yeah. So sometimes what you could do is you could start with the highest time frame and just mark the top. That way, you know, in relation to where you're at when you're looking at the chart, and that's actually what you should. I should have showed that actually at the beginning, actually. So thank you for actually mentioning that. I just know where the high was because this is AMD for me, but I already know like we're lower because AMD has been having a hard time getting past $100. So actually, I do think it passed the previous one, but it just has a hard time getting in this 90 to the $100 area. So okay, so this is how we see. So as we see here, like this date, like December 10th, it starts to go on this run up. So Nez, explain what exactly would you be looking to get in at if you was at this point? But I mean, like, what would you have tried to look at before you got to this point? I mean, because for me personally, I don't know if I would have liked this setup still, because I'm not seeing what I need to see to actually enter the trade. So if I didn't get in here at this point, I probably would not have gotten in again until I see a new level of trading. So if I would have saw this point, because at this point you still don't know if you're in accumulation or distribution. When price doesn't run up, you get either recumulation or distribution. But when you know a good company, you more than likely will get reaccumulation. However, that doesn't always necessarily mean that's the case, because you could get distribution if price has to correct itself and has to allow more people to take profit, or if it's just price action. And so what we see here is you tend to want to see, like if we look at this chart, we get the test. Well, actually, no, let me show different one. Distribution actually makes sense. So this looks more like distribution. at this point. So sometimes it's a little confusing. So you gotta look for what you, if you wanna like get in and you see price mark up, your best bet at this point is to get in at the support level here, knowing that it still might drop. And if it did drop, you might catch it like around this point. Or maybe to fill like this gap. What else could you look for it too? But at this point, this wouldn't be idle for me to want to get in. But this is like at this point in what, November, December timeframe. So we move forward. I'm trying to just go in the future. All right, so as we like play it out, now we notice that like this is basically has become the new support. So now we're in an area like now today, I know a lot of people have been asking exactly what is price gonna do. And so at this level, we know price can still possibly drop more. However, this is where it's kind of like the real weird area, because you have price here at this point. This is like a new support level. This is a new resistance. However, there are some like things you will look at for here. Like, so for this case, when I talk about algorithmic trading, you have these little points here. I have to get rid of this. So in combination to Wyckoff, what we like to look for are those algorithmic trading, those big push-ups. And the reason why we want to do that is when price tends to push up like this, it's too fast that there are a lot of orders. Typically, there's a lot of orders still left here. And if that's the case, that means when price gets back here, that's going to be a strong level of support, and you're probably going to get more of a bounce back, especially when this candle right here, the second candle engulfs the previous candle. Like, so basically what that means is that if this candle entire body is, in a sense, eating it, then there's a good indication that there's a large amount of orders still left there. And the reason why that's also the case is because now you have what's called an imbalance. And what an imbalance is basically when you have like nothing else but one price action taking place.
Can I ask that question in a different way?
Mm-hmm.
And you tell me can I interpret what you just said in my own mind, and then you tell me if that's what you said.
Okay.
On the there where you said when there's a run up like that, say for instance, you got 100 people in line and they got orders, but then you have one big purchaser or whatever, or buyer, and everybody got ones and twos, and this person have maybe 1,000. One person has 1,000, so they accept the 1,000 order, and so it runs up, but everybody with the ones and twos is still sitting there waiting for an order.
Yep.
And then
and also they never give a chance for no sellers to come in as well. So you only had that one, well, not one, but this candle is basically the reflection of just
a major purchase.
Or, yeah, just pushing
Okay.
through. Pushing.
Okay. But when it came back over, when you said when it came back down, because if you look, they never, nothing ever got down to where these other
right.
people.
And this is
so
why
it feel that-
when I was, yep. And remember when I sent you this, I sent the chart earlier because I noticed this candle here and here. So I noticed, and then so I know this was an imbalance area, so it's gonna probably come back down, but it might stop here. And typically, if I was day trading stocks, what that would mean is that, so when you see it in a balance, so you wouldn't have it in an engulfing candle, your entry that you're looking for would be the top of the open of this candle. So the last,
Gotcha.
so it would be the open of this, and my stop loss, if I was playing with a stop loss, would actually be at the bottom of this candle. That's how we have what we call like high risk reward ratio. So my risk to reward ratio be at this point would have been based on like the previous resistance and my stop loss. My risk reward ratio was like about 6.48. And
Wait a minute, could you repeat that again?
my risk to reward ratio, this is just showing me like my risk to reward ratio would be about a 6, like this, let's say 650. So 6, let's just make it an even 6. 1 and 6. So basically meaning that the way this trade is, I have a risk reward ratio of 1 to 6. So I'm basically risking 1 for $6.
Okay. Okay. Thank you.
So my brain hurt, bro.
I'm sorry. That's what I'm trying to bring as, because he's really able to explain it to his peers, and I was hoping that maybe I'm gonna let Nez kind of explain it too, because he's really good at like breaking stuff down.
So again, I got everything up to so far, but it's kind of taxing on my cerebral cortex. But this part right here, this risk to reward, I ain't never seen that. So basically, in there, you're saying if you go from that bottom line where let's say you got in at that wick, and you went all the way up to that top line when you got it, that could possibly be a 6x.
No. Don't think about it like that. Don't think about it. No. So what it means is that I am making $6 for that $1. And that would be just basically if I was trading stocks. But basically saying that I'm risking $1 to make 6, but it's not like in the terms of like a 6x. It's more like, so if I got in this trade at, oh man, I need to get some. What's that? I got too many lines and I can't tell which line goes to which. I believe it's the 88.21, and my stop loss is at 86.42, and my target is $97.94. So your risk to reward ratio is just basically saying that I'm risking $1. So if I don't make this, I'm losing $1.54. So it says stop loss is 154. So I'm losing $1.54 to make $1.54, 62. So I could lose $1.54 in order to make about, what's this? Oh, 162. So, but it's not like a 6x. It's just basically meaning that I'm making the difference from the $97 to the $88. And to make that amount, that difference, I'm risking $1 to $1.54 to make that amount. That's
if the trade opens and closes in that time frame, right?
Yeah, exactly. If it opens and closes exactly like that. And then if I don't, then I lose that. And basically what that means is that if I keep making trades that are in this way, if I make one trade that does hit, that means even if I lost 5 times, that one trade is gonna make up for all the previous losses plus some. So that's basically what essentially a 1-to-6 reward ratio technically would mean. So the higher your risk to reward ratio just basically means that you could take a lot more trades. You're taking a lot of trades that are high quality and you're only risking a small amount. So even if you keep losing a few dollars here and here or whatever amount that you're losing here and there, once you hit your target, you have now, if your risk reward ratio is at a certain price, so like risk reward ratio is at a certain number. So like let's say it's a ratio from 1 to 3. That means if you lose 2 trades, you can make up your losses plus some with that one last trade. But that's if you're looking for only high quality trades at that level. So if you're looking for a 1 to 3 here, but you're looking for like a 1 to 6 here, but looking for like a 1 to 1 here, then your risk reward ratio on the average isn't going to be that. It's going to be the average both of those. So then so just knowing from like a 1 to 6 to a 1 to 3 to a 1 to 1, your risk reward ratio average is going to be much lower. And so you'll be more like in the middle, probably more like around the near 2, 3 area, whatever, or maybe a little higher because of the 6. But what this means is that, but if you're only looking for trades that are giving me 1 to 6, that means I'm only going into trades that are going to give me 1 to 6. I'm only going to get into a trade that's going to be 1 to 6 here, here, or whatever else. And I'm not doing no trades that do something like this. Like I'm not going to get in here, target here, and I'm looking to enter like stop losses all the way. I'm risking all, like, let's say I'm risking, I still make my same stop loss, but I'm entering like in the middle of this range. So my stop loss is here, but now my risk to reward ratio. Let me see somewhere that's a little bit more realistic if I was to get in the middle of a range. Like let's say I want to get in the middle of a range like here. My risk to reward ratio is like a 0.78. Oh, sorry, hold on. Hello? Oh, okay. Oh, yeah, plus.
Mike, this is trading though.
Want me to go over?
Sorry, hold on real quick. Hey, Nez, can you take over for a second?
Yeah.
All right, thanks, man. I gotta go get this real quick. I'll be right back, though.
Are you gonna share me the screen or?
You should be a co-host. Yeah, you should be a co-host.
Okay. Okay, there we go. Okay, perfect.
All right, cool.
Share. Okay, so we can all see my screen, right?
Yep.
Okay, perfect. So let's see. These are, let me go ahead and do this real quick. Since we're going over Wyckoff actually, okay, so let me see if I can find AMD. Okay. Out of today. All right, let's see.
Can I ask you a question? From what Teo just went over, how does that translate or how does that translate over to getting in at a good, well, not necessarily option, but just timing where you can get in at a good point to get a good negotiated option price?
Yeah. So basically, I'm gonna see. I believe he left off when he was trying to do the 50-50 ratio, 1 to 1, right? Basically indicating that, cause me personally, if my win is not higher than my loss percentage, I'm never gonna take the trade. Okay, so basically, if it's like 50-50, I won't take it. If it's let's say 30-70, I would never take it. Basically, so depending on where your stop losses are, I'm gonna indicate like where or whether or not you want to take the trade. Because some people like to take risk and just enter wherever they see. Let me see where he was. I think he was showing us off right there. Okay, yeah, this is where he was showing us. So this is where we were, right? So let me go ahead and put the long position. So he was talking about entering like somewhere right there, right? Okay, let me see this. Right there, and let's say this is our stop loss. Okay, and I'm just gonna go ahead and put horizontal red. Yeah, okay. 65 for 65 for 52. So yeah, technically, since you have a higher ratio in terms of winning, you can take the trade, but it's not something I normally advise because of the way I particularly trade in general. Because like my risk, my reward has to be a lot higher than my risk. So basically, if I'm not risking under 1% in terms of like this particular tool, I would never take the trade. So I tend to have very small stop losses, which is why I rarely take any trades in general, because I like to take really high quality trades. So I might trade like up to like maybe just 2 to 3 times a month, and then I'll just swing the trade because I get really good entries and I never have to like exit or like panic and have any of that kind of stuff. So what he's basically indicating is that the reason we want to have really high risk reward ratio is that if you're perfectly okay with losing what you have, right, you will never really worry about always checking your trades and all that kind of stuff, right? Which is why I'm really serious about risk versus reward. And of course, it all depends on how much you're also risking in terms of just your setup. So in that particular aspect, that is what he's basically getting at in terms of where you enter, because you can enter wherever you want. It just depends on where you're putting your stop loss at. So if you enter right there, let's say at this, let me use this real quick. Let's say you entered, let's just say you entered right here, okay, at this little bullish moment, and you want to take it all the way to the upside, which is right there. Then, like I said, it doesn't really matter where you enter as long as you're risking correctly. So if you put it up there as your take profit and your stop loss is down there, it's still relatively a higher reward ratio, but that's never what I usually take. It has to be over like 1 to 5 or 1 to it also has to be 1 to something else as opposed to like 3 to 5 or 5 to 5, basically. So if it's never 1 to whatever, then I am never taking a trade. So this is basically what I was getting at. Risk versus reward is one of your most important things in terms of, at least in terms of how he and I trade. We have similar trading strategies. So but I'm more crazy on the risking versus he is. Like he's more of the bigger risker. But yeah, in terms of all that, he is more heavily invested in terms of like risking trade. Yeah, I'm really serious. I really follow my trading plan strictly in terms of risk versus reward. So if it's too high for me, I am not entering the trade. So that is what I have. I'm not sure if did he say that he saw this as distribution correct? I believe he did, because that's what he was showing. Automatic rally. So because I do know that, did he tell you about trend lines and all that?
I have a question.
Did he speak about trend lines?
This is our first technical.
Oh, okay. Oh, you said finish my first sentence?
First technical, Kevin.
Oh, okay. Yeah, I was basically just asking because this line, I was trying to show you the indication of like how I was piecing everything together in terms of using Wyckoff. Because let's say you learned Wyckoff completely, right? Well, no, let's say you first start at Wyckoff. There's other things that you can confluence into your trade, and other ways mean like confirming into your trade, such as like trend lines and support and resistance zones. Because I tend to use trend lines as rejection zones, right? So y'all can see here that this is what I would call momentum trend. So technically, retail trader would probably call this what we call just a trend line showing that price is going up, right? But what I like to see is when price breaks down this particular trend line, it shows me that, oh, okay, we have price moving to the downside. And what indicates that as well is also volume, which I don't know if he went over yet, but I'm gonna go ahead and like speak about that. So say it again.
Oh, no. I would, yeah,
Oh,
we know about the, I think we know about the bottom. But but my question is, say for instance, when you're buying, like right beneath your yellow circle, there is a red candle.
yeah, right here.
And when I'm looking beneath there, before you get there is a red candle.
This one right here?
Yes, that one, yes. Now, I want to know, is there anything that can tell me, hey, Pat, you shouldn't buy there because it's possible that that last candle can go down? Is there any sign that I can look for it to tell me that it's possible that it could draw back down, pull, drag down to that last candle? You understand what
So
I'm
this
saying?
one here,
Yeah, that one.
So
I'd
this
rather
one-
buy there than the other place. So is there any
So you
sign
would
that
want
you're looking for?
yeah. I actually expecting AMD to sell overall all the way down to. Hold on, let me check something out really quickly. Where's favorite retracement? Let me see something. Is this the most recent? Okay, so yeah, I'm actually expecting to go a lot lower than where it is right now. But speaking about your question specifically, what makes me think that I would want to buy here? So I would need, okay, let's say that this particular setup didn't exist, right? What would make me want to buy here is basically, let's say that I put this line all the way over there, right? So what tells me is that this is a possible strong rejection zone, because you see how price rejects right there and then breaks once, but comes all the way back down, rejects again, then breaks once, and then it's starting to slow down and kind of retest this area. That would give me an indication saying that price has the ability to respect this area and make its way up to clear this high. Okay, that's assuming if I'm avoiding everything else that I'm currently looking, such as like Wyckoff and rejection zones, such as this one right here. But the thing is, you have to be able to look at the chart as a whole and not just one little section, right? So let's say I call them retail traders, basically meaning like people who just use support and resistance zones. So basically what I'm indicating is that if you just saw this area, a lot of people would say, oh, it's been rejecting a lot, so I'm going to go ahead and buy here. And yes, that does make sense, and to a particular newcomer, right? But that's not the only thing we want to look for. So the thing is, you want to have at least 3 to 5 confirmations or confluences. So confirmations are basically like, okay, why would I want to buy here? So one, I see a rejection. Okay, what's next? But my issue is that I see that it broke this trend line. So now I'm back to 0 because I have 1 for sell, 1 for buy. I need at least 3 reasons to say why I want to buy a trade. Okay, so if I see 3 confirmations of buying, then I will enter the trade. But if I keep having like 2 reasons to sell and 2 reasons to buy, then I just won't take the trade, because you're just pretty much gambling there. You know what I'm saying? So you always want to have a reason to why you want to take a trade, and they always have to have higher reasons as opposed to selling. So if selling is 2 and buying is 3, then technically I only have 1 confirmation for buying, and that's not enough for me. So basically it has to be like 4 to 1 or 3 to 6. So if I do the math, it's basically 3 confirmations basically. So it always depends on confluences. Like, it's not just one thing that's going to tell you what's going to happen. It's always multiple things, such as confluences, confirmation. So like I said, this looks nice for buying, just because it rejected. Like it's had 1, it broke structure, showing that that's a break of structure. So boom, and it came down, price struggle, comes up, rejects over here, price struggling again, which indicates that price had a bull run, as we can see, broke structure again. And then my main issue here is that it did not break structure with the body, which is an issue. But when it comes up here, it finally does, all right? But the issue is that when you use another confluence composed of why you want to buy, here is volume, okay? So I can see the volume here is not showing enough buying strength, which tells me I wouldn't want to buy at this rejection line. Because remember I said that you want multiple confluences for like buying or selling or whichever it is. So if I said I want to see price reject right there, what's going to make me want to reject? Okay, so if I saw my trend line down there or up here, I got to ask myself, do I have enough confirmations to say, oh, price looks good to buy here? Because the only reason I would want to buy here is that it broke structure and it can reject off the trend line. But I don't have 3 confirmations. I need a 3rd one. And volume is telling me that it does not have enough buying strength. So that would tell me that technically I only have 1 confirmation. So I just wouldn't take the trade at all. So that's the same thing that you apply to why you would want to buy down there. So you only have 1 reason to buy here, then 1 reason to sell here. So in other words, you just wouldn't even touch the area. So does that like answer your question, like overall, and based off like what I was saying?
So what are some other reasons that it would be positive to buy? I know you said volume, and then you said the support. What are other confirmations we could use?
Like, what am I looking for?
Yes.
So basically, I know multiple strategies, which is why I tend to have multiple confirmations, right? So in terms of retail trading, I don't necessarily know what are their confirmation, but in terms of my for me, I look for Wyckoff, break of structure, rejection zones, and volume, because that's the only indicator that I use. That's for me personally. But if all four of those are lining up with what I'm looking at, then I take the trade, right? So I tend to look 4 to 5 confluences which before I take a trade, but that's what I personally look for. Wyckoff, rejection zones, break of structure. Liquidity is also one of them, but I don't tend to use them too much in terms of trading stocks.
Hold on, because you're gonna confuse. Because liquidity is more. Look, when he says liquidity, what he's meaning is that like, and tend to be what you're thinking about. If you look at the wicks are tend to be think of a liquidity, which is like tend to be equal lows, equal highs. And that's because there are, when people are placing those orders, that means that somebody's coming in with a stop loss here and a stop loss there. And when you're taking those orders out, you're taking them out the game, and you're now taking their liquidity, their cash, their money. And so that's something that like we look for in Forex a lot. With stocks, it still matters, but
oh my God, let me just get this out of the way. Just kind of.
what's this like your?
I had a question. You said that you are expecting AMD to fall even more. I know that it has those 3 candles. What do you call the black crows? So I was thinking it was going to drop down a little bit more from that 88 to maybe the gap that it has down here at around 77.
Yeah, I that you did. He brought it up earlier, and
what's telling you that it's still gonna drop?
You said what's telling you that it's still gonna drop, or it's not gonna drop that far? Because
Yeah, that it wouldn't drop that far.
Are you talking?
Oh, you go ahead. I was saying, for me personally, the only reason why this is where like it's the fundamental part that's making me not want to, that making me don't think price is gonna drop this far down. Not saying it's not possible. I am more so banking on fundamentals. So, because from the technicals, this does look like it will keep dropping to what you're saying.
Technicals, it looks like it's going to go all the way down there. But fundamentals, I haven't read on AMD at all, so I wouldn't necessarily know how to back it up in terms of the fundamental aspect. But just strictly off Wyckoff alone, I'm going to need to clear this area, because the reason it created liquidity in this area is just so price can clear up and make its way back up. You know what I'm saying? So, but my issue here is I would have to read on it to really see. And the thing is,
wait, you did that weird thing. That weird thing you kind of broke up.
Okay, yeah. So I would have to read on it, like, you know, add the fundamental aspect part on it to really confirm, to see if I would want to, you know, take the trade onto the downside or not. Because if not, then, you know, like I said, I need multiple confluences and all that. So if I don't have multiple confluences, including fundamental, then I do not take the trade, you know. So like, yeah, that's what. But the thing is, I don't know if price is going to drop over $20 for AMD, but what I definitely can say is that if I go to the lower time frames, I can probably see something that will at least have a take profit area. So if I go to like the 4 hour, you can clearly see how price broke structure right there and took out liquidity, meaning like equal lows, right? So that's something you want, which shows that price might be going to the downside, right? So what we could see instead is that we can see price just come down to, nah. The only thing I really see is price coming all the way down there, just based off the chart alone. But let me see if I go lower. Yeah, the lower I go, I see more gaps that could possibly fill. I don't care too much about gaps, but
I do a little bit. Sometimes gaps do tend to get filled, but not all the time.
Yeah, but not all the time. Yeah. So which means price could just come like right there to like, no, that's not enough. But I mean, it could just go to 85 and make its way back up. But to me, lower time frames are the biggest things to help me seeing where price really goes. Because what helps me see price goes like going all the way lower and lower to what he's really doing. Because as I go low, instead of like going all down there, it's like these three, so 1, 2, 3, and then volume is showing me. Let's see, volume is showing me this like, it's like showing me how is that volume decreasing or is it increasing?
No, it started increasing, then it's decreased. It's been
Yeah, exactly. So that as I go lower, I get more confirmations. But off the daily time frame, there's only one thing I can really see, and the only thing I really see is price going all the way to 70s. But like I said, fundamentals are also another confluence that you can use. But when it comes to charting, let's say you use fundamental aspect and technical aspect, you put it together, right? You can just take, let's say, AMD's leader or something, someone important dies, right? I mean, obviously we know it's going to crash. Of course, if someone in this, let's say the CEO dies, we know it's going to crash. But the issue is, do we also information, meaning like add fundamentals? Now, Raka, let me move my laptop over here because I have the farthest room from the Wi-Fi. So yeah, that's why.
Let me ask you a question while he's moving.
So what?
Oh no, I was just saying while you were moving.
You can move. She just wants to ask a question. What's the question?
The volume. Okay, at the first red candlestick, the volume
the big
is
one
at its peak, and then it's starting to go down now, but it's still fairly up there. It's still fairly up there, but the price is going down, so you have more buyers. The buyers are decreasing, or the sellers are decreasing.
So,
I mean, no, is it buyers or sellers?
Sellers. The sellers are looking like they're starting to decrease.
The sellers.
But if you look at the buyer candle kind of did a spike, drop, but then it's kind of been coming up a little bit.
See, well, that's what I was asking, was that since there were so many, could I reasonably assume that due to the volume that it could go lower, but not too much lower. It's too many people in the game, and it's going back up.
I like how you put that. Yeah, you could actually tend to say that. Another thing you could add, I don't think I've showed Nez this before. Nez, go to your indicators.
See, indicators, where are they? Here.
FX. Yeah, I always think that should be the indicator button, man. That really should. I don't understand why FX is FX. Like click the F.
I don't use indicators at all. Where are they normally?
No. Yeah. So no, you had it right, but you had to click the button, the thing right next to it. The FX.
Which one?
Function of X. Go to the left. No, go to the left. You're just doing a layup. Yeah. Go
right there.
Yeah, but just click the F next to it.
This one?
No, to the left. No, to the left. To the left. Like where you at? You was in the right spot, but
1, 2, 3.
Go to the left.
Go over.
Just hit the F.
Okay, so here or right here?
One more.
Yep, right there.
Okay.
Now go to volume profile.
Go where? Volume profile.
And go click on fixed range.
Which one? Fixed averages?
No, fixed range.
This one right here? Okay. Let's see. Is that all? It's not letting me.
Yeah, click on it though.
See? Okay, there we go. That's good?
No, you gotta click on it. You gotta actually click on it. Like click on
My thing went out. Why did my sound keep going? Okay, now say it again. I'm sorry, the sound kept going out.
So click on.
Okay, y'all can hear me?
Actually, click on fixed range. Click on it.
Oh, I cannot. Why is my sound going out?
Hold on. Let me type it in.
Hold on, I can't. Take over the screen because I don't know why my.
Oh yeah, that's what I just. Okay, yeah.
Okay, there we go. Let me see. Let me stop sharing real quick so he can share his screen. Okay, there we go. Oh my. Okay. Oh, that indicator.
So this is like a volume profile, and what it is basically just showing the amount of volume and buyers and sellers. And this red line is tend to be like your you could kind of think of like, okay, that's where it's kind of like a balance. So you will see like think of it like a support level. And then of course like,
Oh, we can't hear you well.
oh, you can't hear, oh wow, y'all can't hear me now. So
Can
this
you
is
speak up a little?
a Zoom thing that I'm assuming. Let me put this. Sorry, it's not coming up. Okay, let me try this one then. Okay, so this one's fine too. All right, so what this tends to be is like buyers, sellers in a sense in the volume at levels. And so what you could look for is that you could kind of, this red line is supposed to be an indicator is like that's where it's a balance. So an equilibrium in a sense. And if you drop down, it will show you like where the next level is tend to be where there's a balance of buyers and sellers. So this one will show like the next level will be like an 82.8. And I just tend to use it sometimes just to kind of give me like okay, maybe if it lines up with my like, so let's say for instance, if I saw the line around here where I think this is where price is gonna really end up at and bounce off, then this would be like my extra confluence to kind of go coincide with what I am already, as Nez was talking about earlier, like my confluences basically telling me, okay, support is here. There's an imbalance. I mean, there's a what we call this is an imbalance as far as here and here, but this actual candle is called a institution fund candle. So IFC or order block is smart money. A lot of people call it a lot of different things, but it just basically means institutional candle, algorithmic trading, et cetera, et cetera. And then what I do is since I enter on the open of the candle before the engulfing one, so knowing this is an imbalance and knowing that this is also the entry point to enter on this IFC or institutional candle, if this was to show up here, that would be an indicator too for this will be extra confluences matching up. So if this line was the red line was to show here, that would be an extra confluence for me. Since it does not, and I look to see where the next line that the volume is at, which is 83.35, then wait, 83 or 82? Well, it's kind of in the same area still, but then that will let me know then, okay, there might be some more hurting if I do get here. And I'll account for that. That's the blessing with options. It gives you room to be wrong more, if that makes sense. You don't have to get it perfect to still get a good gain, to get a amount of good gains. And that's the thing, you're not gonna get it perfect. That's your ego. And I have it. I like to, I love when I used to get in the trade and I had like no drawdown, which basically means like a pullback. It just makes you feel like you're a king. But you're not gonna always get that. It's not possible. It would be dope if everybody could do it, but you're just not. So it's mainly just finding the trades that work for you. Y'all could kind of, I know Wyckoff is kind of a little bit more, maybe just a little bit more advanced, but I like to just push people to test themselves. And the way to think about Wyckoff is just like your overall picture is giving you a glimpse of the big picture, right? Smart money, when I'm looking for the big candles or the engulfing candles or candle formation, that is my map telling me now I can enter into the picture. So Wyckoff, big picture. Smart money is my entry point into the picture.
So
So
Smart Money as a confirmation?
Yes, it's like an extra confirmation, but also it's also telling me where to enter based on market structure, which is the Wyckoff in general. So what I mean is that if price is telling me that this is the accumulation, then I'm going to look to see where do I see, actually, let me just get rid of all of this. So I'm sorry. So let's say, instance, this doesn't confuse me as much. So I know for sure it's accumulation, right? So this is accumulation. Now I'm gonna dig in to look for, in this sense, smart money, to look for where I can see any institutional fund candles. So we can see one right here, but that's in the beginning of range. So you can kind of use that as maybe a sort of entry point, or if you're looking again. So tend to be at this point, you really don't see anything. It's just regular healthy price action at this point. So still, there's really not much to go off of. The only thing you could technically do, you could treat this one here, because you kind of think of this as one big candle. Because when it gaps up like that, you tend to have the same kind of reaction from the market as if this was one candle, as if this was a candle. So from this point, then I could say this engulfs this candle, and this could probably be like a possible entry point. But this would not get me into the trade, so I would miss this one. And so your next bet would then be to just get in at the support. But if you miss the support, then you look for this. But if you miss that, then you just gotta be patient. Then you just gotta wait for your next opportunity. And that's really how it goes. If you try to force it, that's when you start making mistakes. So like that's the thing. This wave style of trading is why I will say I'm just more confident in my trades, because it makes you very selective and patient, and you do waste time. Not waste time, but you are waiting for the market to give you the right setup to into the trade. Instead of like, it looked kind of good, so I'm gonna get in. You know, like you're now saying that the market's gonna do this, I'm gonna get in here. So if you would have saw this here and you were looking up here, then you could have told yourself from this level, if you're in this time frame looking at September, that the last level of support was around this point, so you could get in here. This would have been a good point. If you're using the bands, you would have saw that this price broke here, or it's at the bottom of the band. So if anybody was on the previous, when we talked about technicals before, when you look at the band, all you got to really know for specifically the band is just make sure that the price is at the bottom of the band, or at least below this midline. That at least everything above this line is expensive. Everything below the line is a discount of a sense. And that's to not be how you should think about it. So then to make it easier for y'all, what y'all could do is you could say, okay, I'm gonna use Bollinger Band, and I'm gonna just look for where I see big candles and look for that to be my entry point. If Wyckoff, just looking at overstructured, just isn't as clear. Or you could, there's a lot of ways you could kind of like pair things together. You could just look for where the Bollinger Band and support meet up, and then that could be your entry point. You can also use the Fibonacci. No, that wouldn't be fair.
The Fibonacci is the one that I have a problem with.
Okay.
How do we know where do you start it at?
So that's a really good question. So it tends to be you need to look for a trading range, and then once you find your trading range, you want to put it at the support and at the top of the resistance. So this would be technically the trading range here. Yep. And then I got it backwards actually. So you put it here, and you put this here. And so now that you have the 0 lined up with the support, 1 lined up with the top of the candle, the wick.
Okay.
But this is why, like, this is like knowing the structure, you know this is the trading range. So you keep this, this is how you keep it. You keep the 1 at the top of the trading range, and you keep the 0 at the bottom of the trading range. And then at this point, actually, you don't even need to use all these different fib levels. But if you wanted to, what the fib levels is that's also another confirmation. So think about like the Bollinger Band support. So if you was to look at this, you could say, if you're looking to get in the trade, you could say, okay, like this price point looks pretty active, so this might be a good area to. So if I'm looking here, if I'm looking at this date like around September 9th, I'll probably put this up and say, okay, I'm gonna get into support, or at least if price comes around to 78 level, or well 23 level. I mean, and that's tends to be based on what you're seeing from here. So like, actually, just to make it a little bit, make some more sense. So if I'm looking from here, like this is what I'm looking at, actually like right here. Then if I came on this date, came on September 3rd, then I would say, okay, I want to get in. I would probably get in around this 23 level. So let price play out, and I would say get in right here. And my stop loss will be below here. And then just let it play out. Based on this, this one is a really doozy. This is actually a really doozy. This one is not that clear, in my opinion. Nez, what was it for you? Was it a little bit clearer? Because I could find an entry point, but as far as what the overall structure of this, of what price is doing, is just not clear. It's not giving me a clear distribution, and it's not giving me a clear reaccumulation. It kind of does if I tend to think about this, but this tends to supposed to be breaking structure and kind of come up. So that's not really a good reference point. We have a breaker structure here. So, and we have a failed up thrust here. I would have thought this would have been distribution, but it looks like this is reaccumulation because once we got here, we completely bounced off. So I think this tends to be what we will call, and a reaccumulation is called like a creek, where a price will do something like, and just completely go up, but it didn't do that here, so that's why it was kind of a little bit confusing. And so just, there's a lot of different ways you go into the market. I would say some of the simplest ways, since we already know about the band, what you could do is look for when price is at the support level with the band. So that could be one. So this is a confluence right here, because it's at the support. So this is our support level, and the band, so it's at the bottom of the band. So that's 2 confluences right there that you got. If you would have saw this break of the band, then that's also could be what you consider your 3rd confluence. And then just looking at the Fibonacci level, like knowing that you have it set up here to here, then you know you're also at the 0 point of the trading range. So then those are 4 confluences for you to get into the market. But now if we change this here, because it's the new trading range, to technically from this one, And so looking at this is how you could come to like this idea that you could buy here now, right? Because you could say price broke through the band. It's also at a support level, and it's also at the like the 23 level of the Fibonacci. And I'm sorry, like I'm is this making sense to y'all? I just want to make sure that like everybody's kind of like keeping up and kind of getting it.
Yeah, this part is with the bands and the support resistance. Fibonacci, not so much, but
Yeah, I'm gonna have to play with that.
yeah, I
Yeah.
only to get that in a day. So
I
So-
use the bands and the RSI index.
Who is that? Why I can't see?
Patricia.
Oh, yeah. So
Yeah.
so if we was to show
Yes.
which RSI you use?
The second to the last.
Okay. So looking at this, if we was to look at here, you could do the same thing with support and resistance on the RSI.
Oh, okay. Mhm.
And then so from there, what you can do is if you know that this has been a previous level of support for just going back. So we can see that this was like a level of support, this was like a level of support, bounce back. So it broke through here. So this might be the next level of support. And so you kind of use this as like your, when you can expect that when price gets closer to this level, that it more than likely, not more than likely, because this is just a level of confluence, but if you use this as your support for the RSI, and then you're saying this is a support here, then that would tell you that this is a go ahead because you have a confluence on the RSI, you have a confluence on the band, and you have a confluence on the support. When it comes to the Fibonacci is just because since this is a 0 into the 1, this level at the 23 is just telling you that you're getting at a really good discount because you're back at the 23 level. And that means it retraced far enough. If you don't, and this is because if you're bullish, you don't expect there to be a trace that is going to be far back. You're just saying you expect trace to be back here.
Patricia, you use Trading View as well?
Yes. I saw Tail use it and I liked all the colors and I'm like, oh. But no, that's what I use because it's easier for me. I mean, I don't know how to use everything, but the things that I do use, it just comes across.
Okay. So Taya, you said if you see the large green candle, that's the institutional.
But it doesn't have to be. It doesn't have to be just green. It could be. There are.
That's what I was gonna say. Red. What does the red one mean? A large red one. Does that mean them pulling out?
Yep. So a large institutional candle when it's red just means that they are selling it.
Okay.
So they are pushing orders to sell. They want to get rid of it, and that's why it's dropping like that.
Okay.
If you ever look on Whale's Wisdom and you just look at like maybe you'll get a matter of fact, let's look up a company.
Yesterday I heard Bed Bath and Beyond was trying to sell a whole bunch off.
Oh, really?
Yeah. And that's another question for another day, but I want to know what is a short squeeze, but another day.
Okay.
Yeah.
They sold today. Shoot. I just want to see correlation. So Twilio, let me just look at Twilio. Looked like there was a few orders. So like if you ever like pay attention to some of the institutions and you see like a large amount of selling, that they was like saying, hey, there's been a lot of filing for selling, you can actually see, because they can't just sell all these shares at one time. And it has to be like in multiple transactions. But you could kind of like sometimes see a correlation between when they sold a lot of their shares, and then looking back a few days ago and see that, oh, there was a lot of selling. You could go back and see like, oh, okay, there was a big drop in sell. Same thing with like I noticed somebody just had a big sell. I could not think of it. Somebody that has just sold a lot of shares. Okay, I can't find one. I know somebody just said they sold a lot of their shares recently. I cannot think of what the company was. All right. If I find it, I'll just try to mark it up later. But I don't think this wasn't this then. Maybe this day. But sometimes you could like, if you look at Whale Wisdom and you will see like selling, if you see that they sold some of the shares recently, you can like go back and kind of see it. Maybe it might not be showing a daily. It might show something like on an hour time frame or something. You'll see like a big candle drop or something. Like this right here is a big candle drop. So you'll notice those things like when you see it like lining up with like so and so company, so certain amount of shares, and several people were selling it because this was like their automatic exercise to sell, profit taking, right? So like if you even look in December time, as we get closer to the end of the year, you start seeing a lot of those long candles because they're selling off. And so that's the same thing. It's just institutional selling instead of buying this time.
Got it. Thanks. I still got to figure it out because between TOS and E-Trade, I got to figure out which one I want to use. E-Trade seems to be less busy. TOS is like this.
CJ is going to go over Thinkorswim tomorrow morning. But I think Thinkorswim. She said she was doing it again tomorrow morning and she was going to record it.
Okay, because the other one didn't work.
Yeah,
right?
it didn't work right. Yeah, so she's going to do it. I've been playing around with Thinkorswim. I like it. I do think it's a dope platform.
Herself, or is she going to have a link for us?
I believe she's going to send the link to. No, she wanted to use my account, so she's using my account.
Oh, okay.
Yeah. So,
has anybody else been experiencing a lag with E-Trade?
Yes.
Okay, thought it was just me. Okay, I'm about ready to quit on them. Yeah. Okay.
What do you mean a lag? Like when it updates or something?
Yeah, it's not keeping up with the price. I have to go to TD Ameritrade. That's my that's my surefire in order to verify a price on E-Trade because E-Trade is not keeping up with the prices.
It's up to where you get real time pricing.
Yes, but I will check it again. But yes, I thought so.
I was having problems just logging in. I couldn't even log in. Like last night, I just wanted to check my items and stuff. It was just giving me a hard time getting in.
It's
And
all y'all
today it was slow.
For me, I did experience that, but when I'm home, I make sure I plug in direct connect, not use Wi-Fi. And then when I was mobile, I did see a little bit on my phone that it was lagging, but then again, shit, all of Florida lost all their connectivity for like a day. So
Oh wow.
yeah, I actually thought that the MAGA folks were about to attack down here because phones went out, everything.
I was thinking somebody hacked my account. I was like, oh my God, I can't get into my account. I can't check it.
My brain hurt.
Sorry.
It's Friday.
Yeah.
I just want to show y'all some.
I'm gonna need you to run back the Fibonacci's on another day because it's in there. I just don't know this stuff.
But you're recording this, right, Ty?
This is
I see it saying record. Okay.
recorded. I just want to just show y'all some. At least a little bit more data. I don't want to do Apple though. I don't want to do Tesla. I want to do
XLK. Oh, go ahead with Riot. It don't matter.
No.
It don't matter. It don't matter.
I didn't know what you was gonna do if I do Riot.
You're fine. You're fine. I was interested in them too, but so go ahead.
Well, this is the entering them was easier a few days ago, but now they just kind of, this is like not telling me nothing right now at this moment. XLK. So XLK is actually not bad. This does not, this looks like a sell though right here, honestly. What do you think this? In this area right here. But as you see, before we even get to that though, what you can see here is interesting because this is like, okay. So ignoring this part, it was a change of character, but this was actually a quick reaccumulation. So we had like resistance here, came here, and what happened is it broke structure here. Broke structure here. Came here, and then it just jumped back up, but not as far as the up thrust, and then came back down, test the level of support again, and then it went back on then it broke the rally, and then it broke this, which would be like a clear indicator that this now, so if I would have saw this at this point, if I saw this break this part, that would have been a point of interest. Like that would have been an area of like, okay, now I'm interested in what this trade is gonna do, what this price is gonna do. And as it comes back, I would have probably assumed that I would have been looking for a point in another area to find my entry. I could wait for the support area for it to come back here, and this is why you kind of have to have like multiple like days of like entry points a little bit when it comes to stocks now.
By the way, when you are looking at that point of interest that you have where that white line is, you also have to ask yourself whether it broke significant structure. Okay? So when it comes to structure's going to take some time to actually learn to know where price is breaking structure. Like you're probably going to see the from where that white line is. If you go to the left side, some people might say that's not that one. I'm talking about like right under it. So you see where the go to the left.
This one,
and then go a little higher. No, go a little higher to the right side, right under the white line. So you see that that tiny retest a little lower. Yeah, like that area right there. You see that retest?
Oh, the structure. Okay, yeah, I see what you're saying. Yeah.
Yeah. Some people might say, oh, price went up, then came back down and retested, but that's not a significant structure, right? So, like if I saw price come all the way down there, like let's say I was still a new trader and I saw that price came down, I would start saying, oh, price broke structure. This is a valid area to sell. Blah 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 blah. So I would have attempted to sell on the right side, but the reason it went back up is because it's not a valid candle in terms of institutional. So, but yeah, you're gonna need significant break of structure, which means that area has to break that previous low, but not that previous. Yeah, that previous retest on the very left side. So yeah, that one right there has to break all the way through with the body. Like I usually look for the body candle to be broken through, but if it's not, then it's not significantly valid enough for me. But you know, sometimes you can see invalid candles that don't break structure and just make a huge downfall. But you know, it all depends on the time frame as well. But yeah, like I was saying, it needs to have a significant break of structure. So not like from what I've learned is called noise. So yeah, if you see just a small retest like that, that's not something that you want. You actually want a significant break of structure. So where you can see like a higher high and a higher low, like a significant one, and then but on the lower time frames, it's probably gonna look valid, but you also want to make sure that all your time frames are kind of like confluencing each other, meaning like confirming one another. So like the daily has to match the 4 hour, or the 1 hour has to match the 4 hour, and all that kind of stuff. So yeah, that's what I want to say about that particular candle at the very top.
Mm-hmm. And then is this like, this could be something that y'all do like over time and practicing. As far as like right now, as far as like with entering the market, doesn't need to be as in depth, doesn't need to be as intricate for your entry point, like the way we will do it specifically for like swing trade. Because we are doing long-term leaps and our trades are typically like 1.5 years out, 2 years. You just want to get a good entry point, right? So knowing that you're now in a good area to buy, all you really need to do, honestly, is look for an area to buy at and then look at the option chain and see if the option chain is correlating to a good area of buying as well. Because even though it might still look good here in the stocks, there are times where it still might be expensive on your option chain, especially if volatility is ridiculous. So that's something else to keep in mind as well. But knowing what you know now with fundamentals and the way we trade with the come up, you don't need to necessarily be intricate with your entry point. Just needs to have multiple confluences to tell you that this is a good area to get in. As long as you're not really buying here, here, and here, it's all good. Now, buying here is not bad when now this has become support. So this same area that was bad here is because the trading range was around here. Once we broke through this area though, this has now become the new support. And then so this will be your new area of a point of interest of where you want to look at.
So I got a question. I know when y'all were breaking down the chart, y'all were giving all kinds of stuff that I don't even know what y'all looking at. So for me, I looked at it as when they took that first dip, if you zoom out, when they took that first dip, I got in probably about the bottom of that first leg of the W, right? And then it went up, and when it came back down, I was able to actually average down because I call it the top of that bottom leg.
So you got in like right here, and then you average down like here.
Average down there.
Okay.
So for me, when I saw it hit again, I averaged down here because I saw it as a double bottom. That was for me confirmation that it's going to go up.
And that's honestly, accumulation is technically a double bottom anyway. So like you'll get like
there you go.
Yeah. So it tends to be technically a double, like, because price tends to do like what a double bottom is just does that, and that's tend to be just accumulation anyway. It's just that it doesn't look, just it's not gonna look as clear like that. You're not gonna see price just do double bottom like that. It's more like a complex pullback, come here, then take off or something like that, right? Like when people always talk about how they get their stop losses hit, because stop loss will be here, so it comes and breaks through the stop loss and then it takes off. That's basically because how can I put it? Because people like to think of it as a stop loss hunting. It's not. I don't necessarily think they're stop loss hunting. It's more so about. Well, there is a little bit of a bear trap. It is a bull trap too, though. They do be trying to. It's more like a shakeout. What they want to do is get rid of the weak-handed buyers. That's all, and accumulate their orders. So like when they be talking about sticking to the script, that's a big reason why, because price, I mean, I'm an institution. I want to buy as many orders that I can as possible, right? But some of the volume or the open interest or whatever, some of the orders, I can't buy as much as I want because some of y'all got it. And I don't want to buy it higher. I want to buy it around this point. So I'm going to keep manipulating price. Well, not manipulating, but I'm going to keep putting orders in for lower to average down to get a better deal on the average of the amount of shares I have. I don't want to buy it here. I don't want to buy it here. I'm an institution. I control price and I want to get at a better deal. And so
Looks like that brother shaking the chair again, getting you out of it.
Yeah. So that's why if you really look at a lot of these charts, you will always see some type of dip below the support, as if they are constantly trying to get rid of weak buyers. A dip here, dip there, there. Support, breakthrough, same thing. And it's the same thing with sellers. Sellers do the same thing. They are pushing price and they want to sell it. And so they'll push price up to sell it for a better deal and then sell it off. And so when you think about how price moves and you tend to know that like there's always sometimes gonna be some type of like trap or shakeout, spring or whatever you call it, then sometimes I like to just wait to see that before I even make my move to enter the market. So moving here with XLK where it's at now though, since we have a new level. So let me just. So now that we are in this new trading range area and we see that resistance, support. This doesn't tell me much either, but it does look like it's getting ready to sell. So that's not, I don't like that. Yeah, it's really kind of really consolidating. Like, I don't know if I really test, fail, up thrust.
Since the ETF,
Yeah, this is XLK.
Right, it's following the trend of Apple and Microsoft
right.
and all those. Then,
Yeah.
I mean,
so we could see it pull back again to like right here and then get ready to blast off. You could see that. You could see something like that. You could see something like, because this is looking like distribution. I wouldn't be surprised if we see a drop here and then take off like that.
But why would you look at XLK and not look at the underlying stocks? Wouldn't they give you more information?
Oh, because somebody asked me to pull up XLK.
Oh, no, not you.
Uh,
I'm saying like, okay, I got XLK and it's doing bad, but I'm going like, okay, reason why it's doing bad because Apple's just
oh yeah,
Apple.
we just gotta be aware of this. So we know what Apple and Microsoft are the biggest of XLK. And so then yeah, you see the similarities between XLK
Yeah,
and
you're right. They are.
actually even thank you for even mentioning that.
Oh, that's what I gotta do. I gotta learn how to do that.
And that's not what that's Microsoft, but
Was that compare? Oh, okay, good. Okay.
so as we see here, there's definitely some synergy as we can see here. I mean, even if I was to actually make this chart, so we see that Apple kind of had this little breakout a little bit more than them, but as we see that it's very close to each other. They look almost like they trading together in a way. So then we kind of see, yeah, they do tend to really trade really well with each other. So we expect there to be a sort of breakout. Then maybe more than likely we'll more than likely see them at the same time. And I do believe their earnings are all around the same time as well. You know what? Now y'all got me. Let me look, because I don't think I've ever actually looked at this. So is everybody familiar with what this site is? Wait, are y'all seeing a site? Or y'all still see TradingView? What y'all see?
Oh, I see some stock charts. Yeah, no, yeah.
All right,
Yeah,
so
that's seasonality.
seasonality, yeah. Yeah, okay. So seasonality.
Do Apple.
So the months that Microsoft outperformed Apple. Here. Okay. So Apple's horrible month is September. And I'm assuming because that's like the in-between time between school and the holidays. So they getting ready to start doing their announcement for sales, and people are probably waiting for the iPhone to come out. So that's probably more than likely the reason why people expect they start selling off and they get back in December. But as we see here, January's, I mean, they pretty much, this is this is the time where they start to shine anyway, as we can see. So Microsoft has a bad month next according to this. They underperform in February, March, and then they do well. Damn, this chart is kind of high.
So you would get in March?
No, I would get in. I mean, we'll like February was like a
February.
good entry point. Yeah, it would be a good point. But still, that doesn't necessarily mean this. I mean, but it's been consolidated, so you still have a good entry point based on here. This is just a good point to remember that like February is a horrible time. So maybe the next year maybe you might dictate when you want to exit your trade based on this.
Mm-hmm.
But as you see here, they all pretty much been doing this. So weekends earnings is right there. Actually, I don't know why I forgot that. January 27th is earnings. So this might be when we start seeing price really start to rally. So we'll see. I think we will see price rally. I think price will start to rally, especially when we get closer to earnings. Anything? I just want to make sure y'all leave knowing how to get into a trade better now. I don't want it to be so confused. That's why I try to show like the Bollinger Band. There's a lot of different ways you can enter. And it doesn't necessarily have to be the more advanced way or the more complex way. Like some people can just strictly trade support and that's how they trade and they do that amazingly well. So it's just knowing the different arsenals in your the different tools in your arsenal, right? If you have a lot of different tools, then you kind of like come with your own type of tool. But the idea is that you have the knowledge and you kind of like work your own thesis and develop your own thesis of how you want to enter trades.
I only use the and this way it was for Shimon. I only use the trading view to look at the underlying stock. I still have to go to bar chart and in order to look at the option. It's almost like two different
Right.
things.
Mhm.
Yeah.
Yeah.
Yeah. Mm-hmm.
You don't know how to look at the option in E-Trade?
Nope, I never tried it since it won't refresh like I needed to. I don't waste time there.
Okay.
But I will try it.
Our E-Trade?
Yeah, I'll try it this weekend. Maybe I'm missing something.
If you want, I'll share my screen and run it through so you can see it.
Oh, okay. You know what? In all honesty, I didn't even know it had a power E-Trade. I never used it.
Oh man.
Yeah. E-Trade is
Go ahead. I'm
simple, but it's much better.
Oh wait.
It's better than TOS. TOS is yeah.
And I'm just saying that is 'cause I'm a kindergartner.
Mm-hmm.
To me,
Well,
E-Trade is easier, but I do from watching CJ last week. TOS has a lot of bells and whistles, which I want to learn more. But for simplisticness is E-Trade.
Oh, okay.
Yeah, I'm with you on that.
I don't want to make. I know I have a tendency to make some mistakes, fat fingers on the computer. So the TOS seems like it's more things for me to distract.
But it also can prevent you. Well, as long as you don't have that down, because you can press a button and it will just place the order. But if you don't have that up, like TOS is pretty good about making sure you got to make sure you put the right things in your trade. Because you got to fill out some of the things too. So
I'm going to have to leave you good peoples. Did CJ say what time tomorrow?
I don't think she did. I will try to ask, but let me see.
But I do appreciate going over this. I'm gonna have to revisit the recording just to. I'm a hands-on, so I'm gonna have to try to incorporate that with E-Trade and or TOS and working with the charting and listening to this video again.
Yeah. So like the main thing is like if you go to this, oh, did I get rid of it? Actually, why am I showing this one? I have. That's not the one I was looking for.
Let's see. Oh,
Hi, you ready? You ready for me to share, or you got something else you want to show?
Oh, you can share. You can share. You can share. I'm just looking for a site to send to y'all to go over. I think it would be more helpful.
You gonna put it on the in the chat in the Telegram?
Yeah.
All right.
All right.
I'm gonna have to depart, you good people. So if y'all want to call tomorrow, I'll talk with y'all tomorrow. Everybody have a good night.
Yeah,
all
Thank
right.
you
Good
too.
night.
All right.
All right, good night.
All right. So when you go in, you see the little launch pad on the
Yes.
side. You click right here, and then it'll open up this big major window, right? And on this big major window, you can do everything from you on here. So like, let's say, for instance, we were doing EMD charting, right?
Mm-hmm.
I have my watch list on the side, so everything's here that I want to watch. And the
Oh,
good thing
okay.
I like about that is it makes it easy during the day. So like if I want to see who's been running, who's falling, I just adjust it by who's dropping the most, and
Uh-huh.
I look to see, if any of my picks are in there, I know to get in. And then also tell me who's running. So this is AMD, right? And if you wanted to see the options, go options. And let's just pick, whatever, you pick your dates.
Mm-hmm.
Calls on this side, puts on this side. You find, any particular strike you want to look at. Let's look at the one that everybody's talking about. Go right here.
Mm-hmm.
And then here you can either quote it, add it to your watch list. This is what I do. So I add I add that one to my watch list so I can see where it's going, up or down or whatever. And you put, wherever you want to put it at.
Right.
31 cents.
And then what about the chart?
And then I'm getting it.
Yeah.
So, and then also what I do is once I have my price where I want it to be, I can set an alert. But I'm gonna show you how I look to see where I feel comfortable getting in. So you hit chart, it'll open a whole other window. And when you open that window, it'll show you the call. And I chart the call the same way I chart the underline. So this one here shows you. Now the only difference that I do on this one is I don't necessarily care where it went during the day. I just want to know where it ran for the most part. So I normally do it with a line chart. But today
gotcha.
I was looking for this to see where I could get in at. So I was actually able to get all the way in at that little wick. You see that little wick at the bottom? That's where I was able to get in.
All right.
Okay, bro. I see you.
Hey, when I ask questions, it's for a reason.
Yeah.
So,
And so that's why it's like the knowing the
Like
buying area is cool. Oh, go ahead.
Yeah, how are you able to time it to get in at that wick, at that lower wick?
I'll show you that right now. But this is what made me decide to get in, because I looked at it from the whole run of it from when it came out. This was back when in August, when we were still coming up off that low in March. So there's no way I was ever gonna get it at that low. I didn't actually start getting into options till like right around here. So even if I would have got this right when I started, it would have been the same price. So I felt comfortable getting it at that price.
All
it would
right.
be great if I would have got it at this price here where it dipped, but they say hindsight is 20/20, so I'm good with this one right here.
And just to say, so notice that it's the same principle where he's buying below and at the bottom of the band. And if you notice that he's also buying at a support level.
Yep, this one here, where it touched here, it touched here, it touched here, and then it also touched here. So that tells me that even if it does go down, it can't go down much more. And if it it does, I'll average down and I'll be happy with it.
Yeah, that was a good play. I tried to get in on that 615 at the close today.
I got in that 615.
Yeah,
Mike took it. Mike took it from you.
I tried to get it, and it is still open right now. I was like, Mike.
I was actually trying to get in at 605, but
that's why he took it.
Thank you, Mike.
I got you at a plate at the cooker, I promise.
All right.
So where are the Greeks?
The Greeks, that would be on this other side, but this is where I felt good getting in, and I also use the RSI to see how many people are buying in and whatnot. So that's the chart, right? So that'll tell me my price. Now that I have my price, you can set your you can set your alert, and you set your alert.
Nice.
You know what price. So if you want to be at 615, you put it to when the last is below 615, so you know if it drops. And then automatically you'll get that message, the SMS. And what I also do with that is I set a order and I save it. So once I get that alert, I don't have to go to Rumble and set it up. I send it. So even if I'm on the phone, I'm working or whatever, it vibrates. 5 minutes, I gotta check a text, and I do what I gotta do. So that's that. Now, as far as the Greeks, again.
Well, you got it right there. Delta, implied volatility.
Yeah, those are the two I look at for the most part.
No, oh yeah, I don't want to see the whole thing. Okay, that's good. So yeah.
That alert system is really nice.
So again, I saw POS as good. I wanted it, but at the same time, there's too many things I can mess up. And so here, I'm trying to go back to where I can show you how I got in for that. So, quote. Oh, no, it's not there. Where's trading? Go back to the main screen. There we go. All right, so the way I did it was, like I said, I always make my save order. And once I have it saved, I preview it. And as I preview it, it'll tell me, I don't think it'll do it right now because it's closed. But while it's open, it'll show me as I have a pending order and what the last was. So, and being that I have the live data, it'll flicker between where it was. So it was at 650, and then went down to 630, and it was flickering between 630, 625 for a little bit, and then it went from 625 to 620, and I was like, man, it's taking too long to drop down, and I moved up to 615. Flickered a couple times. Now, it didn't hit immediately, but it did hit.
So over here where it says time and sales, oh, that's aftermarket, huh? No, that's at the end.
Where?
Oh, right there at the left side of your screen, right below the green 625.
Oh yeah, it tells you who got it in for what. Now, there were some people that got it. Some people got it for 610.
Oh, okay. All right.
See, some people got it for 610. Some people got it for 606. That's wow. All right, you can't get mad at me no more because look, somebody got it for 606. They stole yours.
Yeah. Okay, Mike. I'm not mad at you. So my call typically is a limit for the end of the day, but it didn't close or cancel at the end of the day. I'm surprised that it's still open.
Who do you trade under?
E-Trade.
Did you do good to cancel?
Yes.
Oh.
I always do good to capital, because most of the time I undercut by a lot. And the fact that it dropped today, I just want a little bit more active on it.
I'm curious so we're going into a holiday weekend, so I'm curious to see what it's going to do come Tuesday.
Let's see. Another one I was looking at was this one. No, not that one.
Tan, yes. Oh, Neo?
No.
Yeah, Tan, yeah.
It was doing that.
Tan was good today.
It was doing that. It came right down here, but AMD it went under the.
It went under the Bollinger Band.
Yeah, out of the Bollinger Band, it hit the 50-day. I mean,
yeah,
you can't beat it.
Well, if the market is favorable come Tuesday, I won't be mad at you, Mike.
Hey, like I said, I got you for a play at the cookout.
Yeah, I mean, I think we might. I mean, you could see either one. There's really no. I would be surprised to see what happens on Monday. I think it's gonna be interesting.
Well, technically, the market is gonna be closed Monday, right?
I mean Tuesday.
Yeah.
Thank you for
Tuesday you'll be able to get it.
Tuesday we'll see how the markets look on Tuesday. I think that's gonna be the indicator for like what's going. I think AMD might. I personally think it's not gonna drop much further. I think.
Yeah, the line that it hit today was a good. It served as a good resistance, and then it showed off as being a new support. So I'm hoping it's gonna bounce. But if it don't, like I said, we could just average down.
Yeah, average down.
Well, Nvidia was down also.
Oh, Nvidia's been a good price entry point, I think, for the past few days.
Well, it went up before.
But look at how everybody's doing. After Intel came out, and Intel,
that's what it did.
They pretty much did that. We're good and better than, like they pretty much called AMD out. We're better than AMD side by side. Check us out. And then that whole move with changing the CEO, that kind of got all the old guard riled up. But at the same time, the fundamentals on AMD is solid. So I'll take the ride.
Yeah, that's what I figured. It was just momentary because, like I said, Nvidia was coming down also. But SMH though, SMH wasn't bad. I mean, I have one contract.
That kind of.
Oh yeah, this chart. This is just sideways. This is gonna get ready to break out. Like, yeah.
Yeah, whoever got in on that dip, that's love right there.
This one right here.
Yeah.
Yeah, that's one I got.
See, I just got the equal lows. It broke here, came up, dropped.
Yep.
Then you had equal lows here, dipped here, got that shakeout. Like I said, you always are going. You not saying all, but you will just see a lot of times where price just dips further low for just like you'll see just those dips. So this was a really good entry point here. And what was really good about when you see something like a dip, sometimes you will also see like, so this case right here, just looking at this, as I said, like a golfing candle, you could have found an entry from here for the retest from the open of the candle. Stop loss is here. If like just thinking about your day trader, no, we don't need a stop loss, but just saying. Price.
All right, cuz I'm about to break out.
And the same thing happened again later too. So just putting out there like that's why this is the structure and this is the candle that I'm focusing on for my entry point. So overall structure, entry point based on smart money on the big golfing candle. So just want to make that clear as everybody just as I let go everybody to have a good night. Just want to make that just reiterate those last 2 points.
A question for you real quick. What does it mean when someone Short or stop?
Scalp.
Short. And they're doing, they
Oh,
sort of,
you just selling. You're basically doing a sell. You're just basically, so you're doing a sell to open instead of a buy to open. So you're like technically you just sell on credit and then you buy back on debit, and that difference is your profit.
okay. Okay. Mhm. All right, thank you.
Okay, I think that's everything. I hope this was helpful for a lot of people. We could do this. We could just keep doing like a lot of technical series, and it'll eventually like just come together. This is like boot camp course, like usually like a whole day type thing. Like you either keep doing this for like a semester, or you keep doing this for like 2 weeks, the 6 to 8 hours a
Oh,
day.
shoot. Okay.
Yeah. So just know that it's not supposed to be like you just get it the first time. It's not. It's like definitely you gotta keep at it.
Mhm. Okay.
All right, family, y'all be good.
Yeah.
I catch you when I catch up. This Pat, I see you with them charts. I see you. I see you. I'm aiming to be like you when it comes to that balance sheet, because man.
Well, let me know. Let me know when. I have no problem whatsoever. No problem. I'll do it long as Tail's not recording. I'm good. Good.
Tayo.
Tayo. I'm sorry. See, I said Tayo at first, and then Shimona said Tayo. I'm like, all right. So yeah, I'm good.
All right, family, y'all be good.
All right.
All right,
Okay.
everybody do
Good
this.
night.
Have a good weekend, y'all.
You too.
Thank you so much. Have a good weekend. Bye.
Appreciate it.